Here's a summary of the Starbucks Q3 fiscal year 2025 earnings call transcript, designed for clear and concise delivery. Introduction and financial highlights. Good afternoon. Today, we're discussing Starbucks' third quarter fiscal year 2025 results. Brian Niccol, Chairman and CEO, and Cathy Smith, CFO, are leading the call. For the third quarter, Starbucks reported total company net revenue, $9.5 billion, up 3% year-over-year. Global comparable store sales declined by 2%. Global operating margin, 10.1%. Global net new store growth, 4%. Earnings per share, EPS 50 cents, down 45% year-over-year. CEO Brian Niccol's key statements and focus areas. Brian Niccol emphasized that the Back to Starbucks plan is the right strategy, grounded in customer and partner feedback. He highlighted meaningful progress made this quarter, exceeding expectations, and accelerating the transformation of both the business and culture. Key takeaways from Brian Niccol: U.S. business turnaround. While still in early stages, the U.S. business is gaining momentum. Significant improvements are seen in partner engagement, customer connection scores, and value perceptions, particularly among younger demographics. Non-rewards customer transactions grew year-over-year for the first time in a while. Operational excellence. The company is investing heavily in fixing operational foundations. The most significant change is the accelerated rollout of Green Apron Service, a new foundational operating model designed for consistent, repeatable, and scalable standards. This includes an evolved staffing model and the SmartQ technology for advanced order sequencing. Early pilot results show improvements in transactions, sales, and customer service times, with double-digit improvements in cafe orders delivered under 4 minutes. Coffeehouse portfolio transformation. Starbucks is prioritizing a new coffeehouse uplift program to enhance warmth, texture, and design, with plans to complete at least 1,000 uplifts across North America by the end of calendar year 2026. They are also developing a coffeehouse of the future prototype and will sunset their mobile order and pickup-only concept in fiscal 2026, believing convenience can be delivered through community coffeehouses. Innovation pipeline. A wave of innovation is planned for 2026 across digital, loyalty, and the menu. This includes the upcoming launch of Protein Cold Foam, a reimagined artisanal bake case, a new 1971 dark roast coffee, and new platforms for global flavors and customizable energy offerings. International strength. The international segment achieved record quarterly revenue, exceeding $2 billion. China showed positive comparable sales growth and transaction growth, driven by product innovation and marketing. Other international markets, including the UK and Mexico, also demonstrated improving performance. Investor Day. Starbucks will host an Investor Day in Q2 of fiscal year 2026 to share more detailed long-term plans. CFO Cathy Smith's key statements and financial details. Cathy Smith confirmed confidence in the Back to Starbucks strategy and the pace of execution. Key takeaways from Cathy Smith. Revenue breakdown. Consolidated revenue of $9.5 billion was driven by 6% net new company-operated store growth, offset by a 2% decline in comparable store sales. The U.S. saw a 2% comparable store sales decline, with transactions down less than 4%. Canada reported low single-digit sales comp growth. Margin impact. The consolidated operating margin of 10.1% contracted by 650 basis points year-over-year. This was primarily due to deleverage and investments in the Back to Starbucks strategy, including additional labor hours, and the Leadership Experience 2025 event. EPS decline. The 45% decline in EPS was attributed to expense deleverage and Back to Starbucks investments, with an estimated 11 cents impact from the leadership experience investment and a discrete tax item. Future outlook. Preliminary, while official full-year guidance was not provided, Q4 expectations are conservative for the U.S. company-operated business due to the loss of prior year ticket benefits and ongoing initiative implementation. However, the company is ahead of schedule with foundational programs like Green Apron Service, and 2026 is expected to show continued improvement as the strategy scales. Cost structure and investments. Starbucks is committed to a multi-year turnaround effort, investing over $0.5 billion in additional labor hours for U.S. company-operated stores over the next year. Offsetting these investments involves resetting and improving the cost structure across the P&L, focusing on efficiency, accountability, and agility. Long-term margin goal. The company views 2019 margins around 17% overall, above 20% in the Americas, as a useful benchmark, emphasizing the driving revenue and developing a supporting cost structure are key to achieving and potentially exceeding this. Significant risk factors mentioned. While not explicitly detailed as a separate section, the transcript implies risks related to execution of the Back to Starbucks strategy and its impact on financial performance, consumer spending environment, and potential macro pressures, competition from other beverage and food providers, both in-store and at home, supply chain disruptions, and fluctuating coffee prices, the ability to successfully integrate innovation without negatively impacting operations. Highlights of the quarter. Meaningful progress on Back to Starbucks plan, ahead of expectations. Accelerated rollout of Green Apron Service, showing early positive results. Record quarterly revenue for the international segment. China showing positive comparable sales growth and transaction growth. Improved partner engagement and customer connection scores. Growth in non-rewards customer transactions year over year. Successful Leadership Experience 2025 event for coffeehouse leaders. Strong performance in Canada and other international markets. Lowlights of the quarter. Global comparable store sales decline of 2%. U.S. comparable store sales decline of 2%. Significant year-over-year decline in EPS. Operating margin contraction due to investments and deleverage. Challenges in the U.S. licensed store portfolio, grocery/retail channels. Most important statements. Brian Nichols, CO. It's clear that Back to Starbucks is the right plan. We are fixing the operational foundations of the business and building a platform for innovation in 2026. He also stated, "We're not just getting back to Starbucks. We are building a better Starbucks, where everyone can experience the best of Starbucks, one that is stronger, more resilient, and consistently growing," and emphasized that Green Apron Service is Starbucks' biggest investment ever in operating standards and customer service. Kathy Smith, CFO, "We are moving with pace and urgency and are seeing encouraging results from our pilots. We are testing, learning, and iterating quickly as we work towards rebuilding a better Starbucks, known for exceptional customer service and serving the world's finest coffee." She also noted, "Our margins in the near term are impacted by critical investments in our stores, partners, and customers. However, the early signs of progress give us confidence that these investments will yield the returns to drive much healthier margins over time." In summary, Starbucks is in a significant turnaround phase, investing heavily in operational improvements and a new service model to enhance customer and partner experiences. While near-term financial metrics reflect these investments, the company sees strong early indicators and is building a robust innovation pipeline for future growth and profitability.